Hey guys, welcome back to the channel Market Uncharted. Today we have a cool and simple video just for you. We are going to talk a little bit about how to pick dividend stocks, the dividend schedule, and also give a few examples of really cool dividends payments that companies do. Let's start with how to pick dividend stocks. Number one, check if the company's dividend payments can be met entirely by the free cash flow. Look at the free cash flow coverage ratio. A ratio of 1 should be the minimum, which means that it's fully covered. Don't you worry about it. Many websites that follow the financial markets have this type of ratios for each company. Number two, is there at least a 5-year track record for a consistent dividend payouts for the company? Which means year after year, does the company pay back some of the profits to the shareholders? If yes, we are in the good track. Number three, watch out for companies with high debt to equity ratio, as repaying it will take money away from the shareholders, which means if the companies have too much debt to pay, it will cut the profits, therefore will cut the distribution of dividends to us as investors. Number four, is the dividend growing? Anything from 5 to 10% per year over the last 10 years, it's really acceptable. It's important for us as investors feel like that we made a good investment and we are taking profits year after year. If the company does well and really outperforms the market and provides strong results quarter after quarter, it is good for us because we will receive more money. Is there growth opportunities? Consider the market. Why? Because it's important to see if this is a well-established company or if there is still room to grow, room to be one of the top of the sector. Also consider if the sector itself versus the economy, the well-being of the economy, if there is room to grow. If there is, again, a really cool, important situation. And this is my important steps to pick a really good stock. Now let's see that I am already an investor and I want to see the dividend schedule, and this is important. These are the 3 moments in the life of a dividend that we need to consider. Number one, the declaration date, which is the day a company and its directors announce the next dividend payment. The ex-dividend date, which is the date that all shares bought or sold no longer qualify to receive a dividend. So us as investor must hold our shares prior to the ex-dividend date to make sure we qualify to receive the payment. And then, of course, the most important day, the most happy day for us as shareholders, the pay day, where we actually receive the money into our accounts. So this is the 3 moments in time on a dividend schedule. Then this is solid dividend stocks, which means companies that over the years perform well, are really strong financially, show a 5-year growth in their dividend, as you can see here, these 4 companies do, and just overall dividend yield. We have McDonald's, Texas Instruments, Broadcom, and the Home Depot, and you can see a clear growth in the last 5 years, especially for Broadcom, which is a technology company that show a 200% growth in their dividend payment to the investors. So if I was investor on Broadcom, I would be really happy by now. Important to realize that I'm only talking about US stocks. I'm going to make a video also about European dividend stocks, which is the overall European market also has companies that outperform the market, that can have growth in the last 5 years in terms of the dividend yield, have strong dividend yields to provide to the shareholders. I will make a video about this and stick around to see it as well. And finally, just to have an idea that in the market we have some type of quotes that we give to type of companies because of their dividend payments. So a dividend king is a company that pay consecutively years 50, which means that in the last 50 years they pay every year to the investor a dividend. So these are dividend kings. Dividend aristocrats are companies that pay consecutively for 25 years or more, And then we have contenders and achievers. And this is just to give you an idea of profitable companies that can maintain a low debt to equity ratio and still part of the profits reinvest and still pay dividends to their investors. And you can see here really strong companies such as Coca-Cola, AbbVie, Microsoft, Waste Management, Starbucks, Home Depot, for especially for the US market, really known brands. So thank you guys for watching. Don't forget, knowledge is not power, knowledge is potential power. Execution is everything. I strongly encourage you guys to do your own research and investigation to see that is out there much more dividend stocks that can suit your risk profile. But thanks guys for watching. I hope you liked the video. Please subscribe our channel for more content, and don't forget, just like the markets, we will not rest.